Good evening, everybody. Mike Vacchi, PrincetonTrader.com, here with your evening webcast. Okay, I got a lot of notes. I got some direct messages. I got emails. I got some comments on the website that you guys really enjoyed, and I got some tweets that you guys really enjoyed the evening webcast, making a comeback last night. So I'm going to do what I can, depending on my schedule, because I've got to get subscriber stuff out at night. To make this a fairly regular thing. Um, so it's not as detailed as the evening webcast I do for my subscribers. It's certainly not as long, but it's just kind of, it gives you a little bit of an idea of what we do at night to get ready for the next day. So that said, 15-minute chart of the ES. This is the same chart that I sent out in the afternoon. We did a couple snapshot charts today of the ES as things played out. And what I emphasize with that chart is, as we came into 83, the bears were at serious risk of creating a double bottom. You had this low, and then we were coming down to make this low. This little overshoot to 82 doesn't take the double bottom scenario off the table in any way, shape, or form. What the bears do have going for them is a series of lower highs. One here, lower high, lower high, lower high. I could add another one, a lot of lower highs. We've got non-farm payrolls in the morning. Typically what occurs is that price gets walked up into jobs. And that may be the beginnings of what we're seeing right here. It's kind of a walk up into the jobs report. You've got middle band up here at 1790.84. It shifted up a little bit since the close. And then you've got a double pivot area essentially at 1787. So basically right here. So we have to see, and you already got a little hint of a test and a hold. We're going to test this double pivot area here pretty shortly. Probably by the time you see this. So did we hold that area is the first thing you've got to look at. If we didn't, then do we probably go up in kind of a stair-step fashion and give the middle band a try overnight? Perhaps. The one thing the bears did get done today, finally, they did close below the middle band. And that had been a big thing for me for the last couple days. If there was going to be a bearish thesis that had any more than a couple of days worth of legs to it, you had to see it close below the middle band, especially after putting in this kind of a candle yesterday. So the bears actually got it back. And usually they don't get it back. This is usually what happens. This is your typical right here. We get it back. Let me zoom in on that. This, and then, bounce off it. Or you take it for a day, we go below for a day. Now, so we're kind of seeing what happened here, and you see what happened in here when we got below the middle band. It wanted to be down there for a few days. Now, just in time for the bears' triumphant return to the bottom half of the Bollinger Bands, we've got non-farm payrolls. So you've got a huge news event that's going to play into this, and it's going to probably do one of two things. It's either going to solidify a move down to the lower band, so down into the 1770 area, because they're going to sell, the jobs reaction is going to be sell. Or it's going to pop the bulls back over the middle band and either get us back into this middle band battle or going to send us back up to new highs. What's the reaction going to be to the jobs report? I have no idea. Neither do you. Neither does anybody on Twitter. So don't listen to anybody that knows. As individual traders, it's not our job to game the non-farm payroll report. It's our job. Anybody that's followed me for any length of time, I'm going to give the speech again. So here it comes. Don't game jobs. You don't know what it's going to do. You are playing Russian roulette with your account. You have no edge at all. You don't move enough money to make a difference. So what you need to do is wait for the jobs report to come out, see what the range is on the upside and the downside, what the reaction is to the report. There'll be an upside number and a downside number, and you trade that range, and you wait for either a break out or a break down from that range, and then you see a little bit of momentum. What you don't do is say, well, in my vast amount of research and all the CNBC watching and everything else that I do, I think Jobs is going to be a sell. So I'm going to put a bunch of contracts on short at 825. And you know what? You may be incredibly right, and you may be incredibly wrong. And either way, I would argue it's a bad trade because you're not respecting your money. Don't game Jobs. So I'll be out tomorrow morning with a pre-market webcast after the jobs report comes out. So we'll talk about that range tomorrow. And then, follow me on Twitter. Subscribe to the website. People are saying, well, the charts, the Twitter, I got to look my timeline. If you subscribe to the website, when I make a post, it goes straight to your inbox, and you don't have to worry about, thumbing through your timeline trying to find stuff. So check out the website. Come check out the chat room. Got a lot of people signed up this week. We are, we're trading these charts that you see. We're seeing this stuff happen, and we are working together to execute it in real time. So everybody have a fantastic night. I'll be out tomorrow morning with a pre-market webcast. Trade them well. Have a good evening.